Okay, hold on. Went off the rails all of a sudden. All right, I think we're good. Um, okay. I have to start everything up. So that's why I need a countdown basically. Although I only need like 30 seconds. I don't really need 2 minutes, but I do it anyways. So let's see. We're all good. All right. How is everyone doing? Is anyone even here? Everyone seems busy tonight. Let's see. Gil. Oh, you're not. I mean, I can see your comments. So I don't think YouTube can just ban. I mean, every channel can ban you, which you won't know they ban you because you keep commenting. Um, so you're not like quite sure. You have to like have a second account to go check and see if you can see it. So I should know. Bunch of Yield Max channels banned me after I gave them some shit. So do what I can do. We are good to go. All right. Um, I will say it was kind of funny. So the I don't know if people saw. Let me. All right. So Strongman covered this, which good find by him. I hadn't thought about checking for this. So this was one of my gripes with like Yield Max is that they're just giving you your money back, which I could basically see when I did my Tesla video, they had a filing declaring, I think it was like September last year, the whole distribution was going to be return to capital. So I commented on that. I kind of figured this is what they were going to do because 60% is unsustainable distribution. So they're just giving you your money back. I mean, but he found they actually had to post proof of it, which good find by Strongman. So yeah, the Yield Max funds basically just give your own money back to you. That's how they generate such a huge return. It almost sounds like, something shaped like a pyramid, right? Or a Ponzi scheme, right? You're taking money and you're just giving it to somebody, but you're not actually generating return. And then you hope you can keep getting more people in the door to generate more pile of money that you can distribute and pocket more of it. Um, so there you go with Yield Max. If you think this is sustainable, good luck to you. So this is self-destructive at its finest, but that's anyways. So actually, I was just show. So some of these leveraged returns, I think it was no leverage flow. Yeah. So I said before I start, but I had said that these Tesla channels will just disappear, right? So when these things go belly up, they'll just go away, and you'll be holding a bag, 40% lost money, and then you won't know what to do. So I find it funny since my video. I mean, so it has come true to some degree. Like this guy I covered when I talked about YouTubers talk about Tesla. Mr. Stars was so happy about buying Tesla. He's gone. He posted I made a huge mistake 2 months ago. I think he did one additional video and now he's disappeared. So there you go. Somebody that maybe you relied on watching to support you to buy Tesla, and now he's gone. So, and then there was this other guy, Rob Stuff. This guy, he such a trash talker to me. He talked so much shit. He was insulting to me. I tried to help him and warn him that these were a mistake. All I said to him, these Yield Max funds are a mistake, and you don't know what you're talking about because you bought them in the first place. So it's irrelevant what you think. And he went after me really negative. And then he blocked me, called me all sorts of names, said I'm a jerk, whatever. And I'm like, you have no business pushing these funds on the public because you don't understand what you're even doing. He's gone too. So there's another. Hopefully we can get more of these Yield Max channels to disappear. That's the best thing probably for everyone involved if they just go away. These people, the fact that you bought a Yield Max fund by itself shows me you don't know what you're doing with investing. I don't have to see anything else you put out on the internet. I mean, unless you're insane, maybe there's somebody out there who literally understands exactly what Yield Max is doing and bought it anyways. I guess maybe they're sadomasochists. They like to hurt themselves. So maybe there's people like that, but it's going to all end up the same. And we're not even a bad economy. Just wait until a bad, like a real dip. Um, they think that these things have survived bad times. Like you ain't seen nothing yet. If we actually do see like a 10% correction or something, holy shit. And they will never, and they assume like Tesla will recover. I see a lot of them in some online. They just assume Tesla will recover because it's Tesla, and Tesla will recover because it's Tesla. Well, that's not true. It will not recover the same because you capped your gains. So Tesla will never recover from that destruction. Tesla could go up, I suppose, right? But the yield max version of it will not continue to exist. At some point, it'll just be gone. It'll just reverse stock split into oblivion. And you won't understand what happened to you probably. They won't. That's all. It's okay. No, not Tesla. I'm not gonna go into Tesla too much. I don't know. Maybe another video. I might make a dedicated Tesla bashing video. I'm never opposed to that. I love how the stock gets pulverized, the worst news ever. Everything's doom and gloom, and all of a sudden, magically, robo taxi announcement coming in August. How about that? What are the odds? So, good old Eli or Elon. I called him Eli. I was thinking of Manning. I was gonna play this. So, well, before we start, um, I'm in a weird play. Like, okay, so I'll be frank. I've done. I don't like to brag, right? Like, I've done really well speculating this year. So I don't know. Like, I'm one of those people that I don't think that I have some magic pill. There's no magic. You haven't found the key to the market, and at some point, Mr. Market's going to get you back. So I'm in a weird place. I'm almost all cash in my speculation account right now. I have a few things left, but it's very surreal, like to be at a place like this. So I'll show you this. So I'm gonna place like I don't I'm not sure if I'm gonna do much more. The bar is very high for me at this point. For my yeah, as you guys know, I have my speculating swing trading account separate from like my dividend account, and I do this for my own sanity. I don't think you should speculate in the same account of your long-term holdings. That's just my opinion. So I don't know. This account was around $28,000 at the beginning of the year. So I'm feeling pretty good. I don't know. I might just I have like my drone company. Disney's gone. I've I sold my lot. I'm out of Micron mostly. And Nike's out. So I don't know. I might just be done. Which as a YouTuber, you like, man, you got to create content. It's like I don't know. I feel like I'm pretty happy with this. So it is what it is. We'll see what I'm gonna do. Um, I don't know if I've said this before. I think so. I keep it 25, 20, 25, 30,000 beginning of the year, end of the year. I either take the money, put it in my dividend account, or I take it and use it on things that I want to use it on. I don't expand my speculating account. Basically, what I would tell you, like, I don't think you make the same decisions. There's a certain amount of money psychologically that you can handle, and it's not the same for everyone. Um, I don't think so. I'm comfortable with an account of like 25, 30 grand, playing some options, puts, and short-term strategies. And you think, oh, well, just keep the money and keep piling. I wouldn't make the same decisions if it was 50 or 100,000. I think it would get emotional. And then when emotions come in, you're not equipped for that. I think it's the same mentality as gambling to some degree. There's a dollar amount. I gamble very much less than that. My gambling account doesn't ever go past like 5 grand, really. So that's what I'm comfortable with. And my brother and me have gone past that, and we found it is both. It's not just me; it's him too. We found that there's a certain dollar amount of these things that you're comfortable emotionally handling, and emotions play into this stuff. You better believe it. Short term, long term, probably not. It's just whatever you can hold. But short term in the market, like, it's all about emotion. You got to have your balls out there. I'll just be honest, because it never goes exactly the way you think right away. Crocs did not go my way immediately. I mean, Disney, I bought 81 and it dropped immediately to like 78. So you're never going to time it perfectly, but if you have the fortitude to stick with stuff, you'd be pretty happy. So I find I find the people that are constantly bearish on the market, or they like to make excuses about why they can't make money. I'm just like, I think you just are not good at that type of trading. I think a lot of people that rely on silly chart. I've never read charts. I've never looked at a chart. I don't know anything about technical analysis. I could get. I gotta stop swearing because I think I get ad revenue block. So I'm gonna pull this down. So I I think chart reading's silly, and I don't know why people assume if you're doing swing trading that you need to read charts. I don't think that's. I've never done that. So I did about the same last year. I think I was about 250% last year, but it was the whole year. Whereas I'm at this point now in 1 quarter. It basically I've learned like recently, it's you got to be more comfortable if you're doing what I'm gonna do, if I'm doing. I mean, if you're managing a portfolio where you're constantly in the market, that's not what I'm doing. So I don't know. I'm not gonna tell you anything. But if you would do it the way I'm doing it, you have to be comfortable being in cash a lot, is what I've learned. Because I've been more doing the speculating last like 4 or 5 years. This kind of strategy. Most of the year, I'm just cash. Like honestly, a lot of it's just sitting there, and you're looking for things opportunistically, and your bar should be higher than you think. And I kind of learned this from Dumb Money and Chris Camillo, and he's talked about this. So I've taken a lot of from him that you don't need to constantly be in there churning production. It's just like you need like 4 or 5, you need like 2, 3 good ideas a year, for that type of account. Like, do I think you should put all your money in this type of no. And I don't like that's why I keep it limited. I don't pretend that there's magic. There's no magic. You could easily get clapped doing stuff like shorting companies or short-term plays. Turnaround plays like Disney um can be risky. So I don't know what to tell you, but a lot of people out there think they have the wrong approach to how they think you can just manage this 40, 50 stock portfolio and you're just going to triple the market because you have alpha yourself. And I don't think so. I don't think it's sustainable for people that work a normal job. um, I think chart reading is astrology and it's fake. I don't. I guess I can prove. Like I don't read charts, and I can swing trade and do just fine with it. It's still about investing in companies. Some momentum and social arb trading comes into it for me, um, but that's different. So I don't know. I guess this won't be good for YouTube. So it's like I don't really give it like I make like $50 a month doing ad revenue, so I don't really give a shit. Like I do much better. I make money investing. I don't really care about ad revenue. I I don't really care about sponsors. I can't imagine a dollar amount they would have to give me. I really don't care. I do just fine on my own. So it's kind of weird to like talk about these things sometimes, but you kind of have to because the real shitty investors love to throw fake returns online because it's just like ad revenue or it's subscription money. Um, I don't know. And then I don't judge them on that though. I judge channels. I don't care what they post for because they can manipulate their returns. I judge a channel. Can they put a thesis online and does it work? Like, can they actually put out an investment top like idea that it pans out? And that's how you should judge YouTubers, I think, in finance. Um, and I've mentioned before, like my big example, Ryan Williams put out a thesis, on a specific company, Williams Sonoma, and it did fantastic. I don't think he has a specific video on that, but Fabio has put out many videos, same idea. They've put their thesis online and it worked out, right? And they've held up to scrutiny. So that's how I judge YouTubers. Some of them though is like at the same time, there's like YouTubers like Jeremy Lefebvre. He just throws money at every stock that's popular online, and like 2 or 3 of them hit. But I think he hides his total returns, and then he just keeps posting like what does he got like Elf, Tesla, and there was maybe Meta and Palantir. Like he's got like 3 or 4, but he's got a wasteland of investments that have failed. So he's just throwing darts at a wall, and then he'll show you the ones that worked out. But there's really no magic pill, I hate to tell you. And I don't presume. Like, could I dump like $500,000 into stuff speculating? Sure, but I would have a heart attack, and I don't think I could emotionally handle it. Um, I really couldn't. I think people lie to themselves, and you think you're some Chad that you don't care. You'll turn 50 grand into 100,000, then a million, and it's all the same. You just plow and return. And I don't think you respect the market enough. And those people get their, get whacked at some point. It comes back to get you. So, oh my God, look at all these people here. I should speculate more often. I just call a lot of people don't want to say it on YouTube. I mean, that's what you if you're not going to hold the thing for like 5 years, to me, you're speculating. 2, 3 years is still speculating. Um, I'm more honest about it, I think, than a lot of YouTubers. A lot of YouTubers tell you they're long term on everything because they don't want the appearance of being someone that speculates in the market because they're selling you some sort of long-term investing thesis or course. So I would go against what they want to show. Everyone wants to pretend they're Warren Buffett online, is what I've learned. Everyone wants to be. They want to tell you they're Warren Buffett and they're going to buy Cease Candy and hold it for 4 decades, right? But they can't because they have to churn video content. You can't do that. You need to keep buying new stocks. Um, so they don't. They hold things for 6 months and then they bail on it. I'm like, What are you doing?" But it's if they were honest about it, I'd give them more respect to say that they were just churning some sort of speculative thesis. So, how good is ADP? Really good or the best? I mean, it's in my dividend portfolio. ADP is like a Mount Rushmore dividend stock to me. I think it's a technology company. I don't they classify it as industrial. I don't really. I view it as a technology company. Um, their growth at the size they are is still amazing. The dividend growth, cash flows. I'm a big fan of it. Um, I learned to trade because I joined Bid and Ask Nation for $80 a month. Oof. Oh my god. I I don't know why everyone thinks like you need to look at charts to do short term trading. I never understood that. You're still buying a company, right? Um, and I think social arb trading is more applicable to that type of than chart reading. It's been better for me. Because last year, like I was doing like social arb trading on the banking crisis. It was more. It wasn't even based on fundamentals. It was just like I had a feeling, a very strong feeling, Jamie Dimon would come in on First Republic from what I was seeing online and comments he's made in the past. So I was in there big. And then other than that, it was just only like 2 other trades last year. Um, but it's hard. Tried commenting on people's videos, ban me. Oh, I somebody must be mad at you. Dan Gambling Man West. See, I don't view it as gambling. I don't know what else. I view the mentality of speculating has similarities to gambling like sports, but it's like calculated risk adjusted, like calculated risk, I guess I could say. Like I look for stuff that I'm pretty sure. Like I was very like Disney. Was very sure on. I was very sure on Crocs, and then it actually didn't go very well for a long time. Um, I was extremely sure on. I should say there was a certain company, ad company that we heavily shorted recently. I was very sure on it. And I know some people say, "Well, risk and blah blah." Blah. I'm like, if I see it, I go in, and I saw it. So Micron, I was extremely I was confident, not extremely confident. So my friend did a lot of the groundwork on Micron investing when it was like 90, 85, $90, and I went with his thesis more than my own. That worked out amazing. That was probably the best thing I've done this year, actually. So I'm mostly out now because my I think Micron is worth like 150, but now we're in this risk discount rate. If it's at like 125, 126, it's like, okay, now we're getting close to if you made a discount it. Like 150 represents like a perfect world valuation of it, which it's very rare. Even Strongman got, but yeah, he got for like a week. So I'm gonna cover one thing in his honor because he's out, I think, for another few days. Um, okay. Can't generate now proxy results. Yeah. See, I got out of Disney. I got out of Disney at like 112 because I didn't want to be part of the proxy fight. I just didn't want any part of it. So I got out at 112. Obviously, I didn't top it. Like it kept going and going. So I'm not. I wasn't sure. I thought he had a shot until George Lucas supported Iger. Then I knew it was done. That was because he needed like something like that. He might have had a shot. But when Lucas supported Iger, I don't think Lucas really rocks the boat anymore. He's just an rich old man. I don't think he really cares. But so I'm out of Disney, so I never wanted long term to hold Disney. Some of the content they're creating still kind of troubling, but the park path to profitability stuff worked out. I think they're executing that. The parks and cruise line part of Disney is executing. ESPN is on a path to increasing profitability. They might actually have profitable Disney Plus soon. It was like breaking even last quarter. Amazing. Like they're doing what they said they were going to do. Just some of the content they're creating kind of looks like shite, but all right, I'm gonna play this in a video. I thought this was interesting. Let me remove this. Okay, I thought this was kind of intriguing. I just saw this when I was leaving work, and I've been feeling like talking about this, but I wanted like a good video. So nice, short and sweet, 4 minutes. I'm gonna play. I might like flip through it.
Or even picking and sorting items. No question, robots can do this better and faster than humans with no risk of injury. A recent report found 37% of workers surveyed are worried about automation putting jobs at risk, but 73% think technology can never replace the human mind. Nearly 3/4 say they're ready to learn new skills or retrain to remain employable.
Wow. So this is your new office?
Yes, ma'am. This is my office. Welcome aboard.
Consider Jackie Burton one of them.
Holy cow. So you're attached to a 53-foot trailer back there?
Yes, ma'am.
A year ago, she was an order filler at Walmart, picking groceries for deliveries. But as the company automated her job, she pivoted, enrolling in Walmart's Associate to Driver program. After 18 weeks of training, she became a certified Walmart private fleet driver and now makes 6 figures a year.
Is that a lot more than you were making?
It is. I'm definitely in a better position for...
It's loading and unloading pallets?
That's right. Day after day, week after week, month after month, year after year.
But 2 years ago, his manager suggested he enroll in a 2-month automation.
So this guy was just like a boxing, like he literally, his job was just to take boxes on and off of trucks, right? So then they offered him a training program.
The upskilling allowed him to trade in his manual labor job to be an automation equipment operator, making up to $27 an hour. The role puts him on a path to manager roles with annual salaries of $60,000. Now, his day involves monitoring these 2 robots as they build pallets of Walmart goods. He intervenes when the bots get confused by simple things like a box falling on its side or when the computers detect a problem.
We're using our minds to solve problems instead of our bodies. And
I love that line. That's a great point. So it's like for people that are scared, it's like the future is ever present and pushing forward. And that's a great way to put it. It's like instead of using his body, he's using his mind now. So productivity, right? He can last longer. He doesn't have to, if his back gives out, he still has a job. This is going to result in a higher paying career that involved some slight training, but overall, it's great for someone like this.
the great thing about automation. You're being engaged on a mental level.
What would be your advice to someone who's in a situation where automation is coming to their workplace?
And people are like, okay, well, it's taking jobs. It's like, okay, maybe there were 2 package handlers. Now there's just this guy, but he's making more money. He can sustain himself longer because he's not breaking his back. He's thinking more, which, and then he's, I think in this economy, would you rather have more people in jobs where they have to use their brains, right, than their backs? Like productivity, you think he'd be a more productive member of society at this point?
Anyone can do this because it's all about training and it's all about your ability to dedicate yourself to anything. It's not just a job anymore. It's now a career.
building those.
And there's a lot of people in America. I work in labor related field, so a lot of people are not extrinsically motivated to go to college or get trained, blah blah, like stuff like that, like, or intrinsically motivated, right? So like it's not like something internal that they have to do just for their own good betterment. A lot of people in America will only train if they have to, right? Extrinsically motivated, more money, or they literally can't find a job with their current skill set and they have no choice but to upskill. So there's a lot of people like that. And you probably can't imagine that if you're not that type of person. Like I went to college for 2 degrees. I no job, right? Just got the 2 degrees and then I'm out in the world trying to find my place. There's a lot of people more like this guy, and that's, there's nothing wrong with that. It's just a lot of people will go out into the world, look for a job, and then if there's nothing at their skill set, maybe then they have to go and up train. And what's great about people like this though, a lot of them won't go into severe debt because they'll have a company pay for it, or honestly the government has job training centers that will pay to some degree for certifications, not like bachelor degrees, but like certification technical type work. So the government pays for this, states pay for this, corporations. So less debt, more productive members of society. This is positive things. And I know it's scary for people because no one wants to hear that some jobs get eliminated. But, okay, his job, let's say, gets eliminated, building pallets, but then new jobs get created, right? There's a machine now that builds pallets. Someone has to build that machine and service it. He has to learn how to program and operate it. So new jobs are created that didn't exist before in these situations.
Careers also the focus at Amazon. By 2025, the company will invest $1.2 billion to help more than 300,000 U.S. employees get into higher paying careers through upskilling with free education and training.
We won't invest in everyone.
Ofori Egboka is Amazon's.
I can't even begin to tell you, there's so much money for this type of thing. Nobody's against this type of like up training, upskill, this type of stuff. Nobody in Congress is against this. This is one of the few things that's not even political, because job training laws that I work on, they get approved almost like 98-1 when they get like through the Senate and Congress. So these are very popular. The money's there. There's so much because unemployment is so low right now. There's just so much money in the government for training and job training people.
Vice President of People for Global Operations. What would you say to someone, an employee who's like, there's so much happening? Where would you tell them to start?
I'd say get excited about it. Ask your supervisor, ask your leader, ask HR. These opportunities are going to continue to grow, and we've proven it. We've created hundreds of jobs in the area of robotics.
Since launching its Mechatronic.
And he had a good point, because this is going to be on people in America. Like, you have to push yourself. And a lot of people just want to do 9 to 5 and go home and sit on their couch and eat ice cream. Like that's not good enough. You've got to keep pushing your skill set up. That's going to be the future. Improving yourself, looking for opportunities, going to get certifications on the new tech, on new machinery that shows up at your office. A lot of this stuff is voluntary, right? And you either are going to do it or not, and you could get left behind to some degree. But there's training still for those people. Eventually, they'll find a place.
And robotics apprenticeship in 2020, a free 18-month program. More than 1,700 program provides free.
That's more affordable to people.
And that really.
So then what's
okay? So now they do their little chit chat. So I thought that was a nice little short, succinct message. So this is like productivity in the economy, right? This is actually the Bureau of Labor and Statistics follows this stuff and tracks it. Unsurprisingly, if you look, let me zoom in. Over time, it only gets better. Labor productivity, right? So you want the definition? I'll give you the definition. So here it is. Labor productivity is measure economic performance compared to the amount of output with the amount of labor used. So the economic activity created by labor output. It's a metric that we've been tracking for a long time in the US, and technology and innovation improve this. So you, the person, So just think of that one guy. His productivity for the economy used to be going into a truck, taking a box and moving it from here to here, right? Now what is he doing? He's operating an automated palletizing machine that probably replaces the labor of 2, 3, let's say 2 people. Let's just make it okay. Like he's doubled his productivity. Like let's, not be too specific. He's increased the productivity to the economy, right? Like theoretically. By how much we don't know. But you can see over time, it's only for the most part improving. Obviously, the downtick, we could see there was a slight downtick in labor productivity during a certain time when we all sat at home. I can't say so. But and then what's interesting too, though, you see labor productivity is increasing, but then look at the hours worked, basically flat, maybe slightly increasing, but basically we're getting more out of people in America with that, for less labor, which is great. And there's already been people talking like in the future, you could have 4-day work weeks, could be a thing before I retire. Honestly, I think it could happen if these productivity numbers keep increasing. The value of a person is in the skills they have and not in the hours they're working at these companies. So that's going to be on people to keep increasing their skills and go to school. And I'm not talking traditional bachelor math. I don't think it's going to be bachelor's degrees necessarily. A lot of this stuff is going to be technical at community college level, these skills, I think. And then you can go to a company and then they can train you more specifically in what they want, like these big companies. Or like my friend works for a utility company, right? You have a certification to start, and then you do more training as you're on there longer, and they develop your skill set. And then like my friend, he's a lineman, but he's going to get his MBA. That's so he has college for free, and then he could go to management. So these companies, like your value increases because the birth rate's down, population's getting older in America, unemployment rate is very low. So good. I think this is all positive things for people, but it's what do you put into it? If you just walk out of high school and then you just think you're going to go work at like your local gas station and then you're going to gripe about how your life sucks. I mean, there's people like that everywhere. They're always left behind. Let's face it. It's not AI or robotics. They're always left behind, people like that. Like for me, I was shoveling concrete for pools, right? And then I went back to school and I guess upskill, and then now I'm doing pretty well as an auditor. So this is the future. It's inevitable, but this is a good thing for America. Like in New York, we just like got rid of all the toll booths, and people are griping how the job losses. It's like, does the New York State or New York State economy really need toll booth workers? Someone that sits in a little booth and collects your dollars and quarters. Like, how productive is that? We can take them and retrain them, and they can do something that's has more skill involved. So the money's there. I would just tell you, like, the money and the will to do this stuff is already in place in the government, right? There's just so many programs ready to help people like this to improve themselves. So that's not the problem. It's people have to take accountability. Guess what? They never picked the job. Uh-oh. We talking about the Matrix here. Oh man. I'm sold. Like some people, like you should do this degree or that degree of AI and robotics. Like, do I think you need a robotics degree? No. I think you're going to need some sort of trade is going to be important, but that there's work professionals you can go talk to, like locally. There's these one-stop centers. They can tell you like what careers are fastest growing. I don't know if you need that specific type of background. Like everyone's not going to be building computer chips and maintaining robots. So anyways, okay. So for strongman, okay, let me pull this down. I'll show this briefly. So, okay. Since he can't make a video, I'll make a video about this. I don't normally talk about Jeremy because I never really followed him. So I hate watch Everything Money occasionally and Meet Kevin, let's say, but I never really got into him. But let's revisit this kind of briefly. Honest, because there's a reason to revisit Honest.
Record quarterly revenue of $85 million, which is impressive considering the environment. And they had a lot of things working against them in this quarter as well that we'll go through in just a moment. So their number actually could have been way higher than that. 2023 first half revenue outlook of 7 to 10% they're expecting for the first half. So that's, nice strong growth. I would call that. Okay. Now, in regards to their businesses, so diapers and wipes grew 3%. That might not look like the most exciting thing, but when you dig a little deeper, and like I said, this management team is the best at giving details, you realize the number is way better than that, okay? Revenue from diapers and wipes, which is 65% of the total revenue for the company in the third quarter of 2022, increased 3% in the third quarter of 2022 compared to the third quarter of 2021. Growth was seen across all key regions. Do you want to not repeat this year? So I'm guessing last year in the same quarter, they must have had some sort of chance to be something in retail. I love this. I love how focused a company is, and not just on retail, but digital as well, in having control over their customers, actually offset by the best that will hit. That's going to have, that are going to have to dilute shareholder value and are going to have to take out big national opportunity, because that's something that's big for Honest over the coming years. And we got our initial order positive EBITDA in terms of any sort of positive. They might actually become a cosmetic. It was like
come on. I thought he was going to talk about Jessica Alba. That was a disappointment. Okay. So, unsurprisingly, so that video, okay, that was the fall of 2022. So if we look at Honest. Okay, Honest Company. So I think he bought it in the back here. Somewhere here, I think. What a pile of shit. At least he didn't buy it. Maybe he bought it before then. So basically nothing. Flatline. So it was like in fall of 2022, it was 340 and it's still like 340. So flat. All the gains of the market since 2023 and this year. So junk. So she's leaving, which is hilarious because a lot of people that bought Honest, I think their thesis was that Jessica Alba and her brand was going to push them into some huge diaper producing Honest, weird company. So these things are so weird because grocery stores have their own in-house brands. So I never understood why this was such an appealing idea. Because I've said this, but Tattoo Chef even, grocery stores see what's successful and then they copy it with their in-house brands. So it's really hard to crack into that space. Extremely hard. Because all the big players are very cognizant of what's working and they will adapt to something. So if their Honest diapers were killing it really, I mean, they'd have immediate competition from the other big players in the grocery stores themselves. But yeah, so she put this heartfelt message. So she's like, I love this brand. I'm leaving. So she's ditched her own company after I'm sure she's made $1 billion in this company. And now she's gone. But we can look at quarterly. I mean, do we really need to look? I guess they went slightly profitable the last quarter. Wow. For the first time ever, they actually were profitable. I mean, but this is like needle's edge. Anything goes wrong, destruction. But I don't know. I never understood what he saw with this company. I guess he thought he could just replicate the Elf investment, but what a completely nothing burger. I'm not gonna say this is shit, but it's such a nothing burger of a company. I never understood this thing. So who knows if it'll keep going because the founder's gone. So I thought that was kind of fun. Has Sasha reaction video? He takes shots at Strong. I got a bone to pick with Sasha at some point. I really do. But we'll leave that for another day. So cheers to another beautiful Lafufu investment. So, and it's funny because so this was a video. This was 2 days ago. I think I don't know if I can zoom in. Can I zoom in? Nope. So he's got his stocks I have at the moment. Yeah, stocks I have money in at the moment. Okay. So I'm looking at this list and it's Tesla, freaking getting annihilated recently. So crap. Let's see what else we got. Fubo. You want to talk about? I have no effing idea why. I don't understand Fubo. I swear to God, I don't understand like what you're doing with this company at all. Because I remember, I think he said that he bought it because he was interested in their gambling app. So Fubo was going to have a gambling app on their devices, and then you could gamble on like games while you're watching them. Which I'm like, how hard is it to go to DraftKings while you're watching a game on your cell phone? It's not hard at all. I'm like, this is a dumb idea. They got rid of that idea immediately because they knew the regulators weren't going to be down with that idea. And then I think he bought it after that and still was talking about the gambling app. But I like this company, like what does it even need to exist at this time? We got Fire TV, Apple, Hulu, Netflix. I don't understand why Fubo TV needs to exist in the first place. So you can look at the margins; it's like complete utter garbage. Like they've never made money. So his destruction on this one's pretty impressive. 90% down. I think if he bought it years ago. I don't know. Do we really need to? And SoFi, he bought SoFi after earnings. So he topped SoFi so far. He bought it literally after the last earnings. It went up to like $9-10, and then he bought it. I knew that was a clown show when he did that. I was dying. He bought Nike before earnings, topped that too, which I had puts on Nike for earnings. So I don't know what he was looking at because I fully expected. When Nike went into earnings at 100, I couldn't believe it was at $100 when it went into earnings. I'm like, this report's going to be shit. I don't know how it could. I don't know how you thought that Nike was going to have a positive earnings last quarter. There's no way. PayPal, he lies about his cost basis. He was buying that at like $120, $150. I think I have a video clip of that. What else? Those are the ones that stick out. It's hilarious. So anyways, so there's since Chris can't do it, I don't think yet. So LaFufu taking Peter Lynch adage of buy what you know a little too literally. Yeah. Oh, he does too spout that, doesn't he? Like a gas station attendant thinks he knows makeup companies. He had one Elf, great investment. Might be his best investment of his life, I think, actually, by percentages. I think that might be his best return ever. So good for him. But it's just a wasteland of like crap that I see. All right. So I'm going to bore you all to death. I'm not going to read this whole thing. I would just say they post this. JP Morgan posts this report. They updated. I think the first one was 2012 or 14, and then they updated it like 2021. I think this was. Yeah. So, a lot of these companies will put these reports out there that you can read. JP Morgan and Schwab does a lot of these reports. I've put in videos. There's just one thing I'd like to. This isn't going to be a separate video because there's not a lot of COVID talk in this thing. How I said it. I'm going to get demonetized. But these people, everyone just like assumes like PayPal's going to go back up. I swear to God, everybody that buys PayPal, I think they just think it's going to become like this $300 stock again because it was there before. But this is like a study that JP Morgan's done. I highlighted this part. More than 40% of all the companies that were ever in the Russell 3000, so that's the biggest 3,000 companies in the US, basically, experienced a catastrophic stock price loss, which we define as a 70% decline, which is not recovered. So 40%. So almost half the stocks in the Russell 3000 that had catastrophic declines never got it back. So I think a lot of people buy the dip. You hear that term, buy the dip. And there's a lot of retail that just thinks things will go back to where they were because they were there in the past with stocks. And there's literally no evidence of that. In fact, a lot of stocks that get crushed never recover. And the buy the dip mantra is really weird. And you'd probably be better off just not even following that mantra. And I've said before, it's weird when people are like, I want a stock that I'm buying to keep dropping so I can buy more. I'm like, I don't know. When I buy a stock, I have like a range of price, the price range I want to buy it in. If it keeps going down, I'm scared to death because I'm like, I've missed something. My research is flawed. Something's not right. Like if Disney, I bought at 81. So I thought, okay, it's about where I thought it should, acceptable risk. It had dropped to like 78. And then I'm like, okay, it wasn't that nervous. If let's say it dropped to like 70, I would have been freaked out. I wouldn't have been like happy to buy more. I would have been freaked out because I'm like, I'm wrong. Am I wrong? What am I wrong about? I need to reevaluate this. So I've never understood that buy the dip. Paul says that shit like, oh, I want my stocks to be garbage for a long time so I can buy more. Like, that's not I don't understand his process. But and then here's a percentage of stocks and sectors catastrophic failure. Remember, 70% drop of stock price, right, is what they define as catastrophic. And you can see some of these sectors, it's a bear. Like you're talking like 50, 60% of the stocks that have existed in some of these sectors have had catastrophic failures and they've never recovered from them. So owning individual stocks, like you're fighting the odds in general. Over long periods of time, owning individual stocks, the odds are, it's tough. I mean, I have some still. I'm not saying, again, I'm not a total index person, but the point is like companies can get crushed and they might never recover. So this is mostly to the PayPal people. I think a lot of you think it'll just go back up because it was there in the past. And I think you should reevaluate how you're thinking about investing. So I think you might have made a mistake. Anyways, there wasn't a ton more. And you could see the annualized return of stocks in the Russell 3000 compared to the median. You could see this is probably not surprising. The vast majority, if you look to the left, there's more negative returns from the median of the Russell 3000 than, beating it. So you're, over long periods of time, you're fighting, inevitability with some of these companies. So that's why I've kind of said your core should be an index, low cost, diversified index. And then you can have some satellite holdings where you can take some shots. But the odds are stacked against you, but it's okay. You're taking on risk with satellite holdings because you're trying to beat the market. So you can try. So that's all I want to share with that. Anybody? 100 years, 98% of companies will go to zero. Yep. A lot of companies won't exist in a while. McDonald's will always be here, though. That's one that I can tell you. So this is the buy index argument. Yeah. I mean, I'm going that way a lot. I really don't want to add any more companies. I've said this before, like, unless it's a grand slam individual stock, like if we're talking long term, if I can't see it like doubling in 5 years, I'm probably not long term on it. Maybe I'll just do some sort of swing trade. That's kind of my ballpark metric because you're taking on all the risks of individual stocks. So to me, it's like, okay, doubling in 5 years, how achievable? Like Carrier, I bought it like $38, $39. I totally am convinced it could double in 5 years. I think we're up to 57. We're a good chunk of the way towards it in maybe 2 years. So it's intact. I think that's my barometer at this point, but I'm older than you. Do what you want. Who else? Disney is forever. I think Disney, the thesis I had is done. Pretty much, I thought. So I'm good with it, and I'm out. I think the turnaround, the stock represents that the turnaround is happening at to some degree, and there's still risks that something could go wrong. But yeah, I mean they're doing great. I mean, yeah, if your kids own Disney and that's the first stock, great, good on them. I think it's going well. We still need to know who the CEO is going to be, right? And I think Nelson Peltz had a positive effect on the company. And this is the thing. activist investors can be successful even if they don't like quote unquote win and get board seats. But I think I think Peltz did affect Disney thinking on stuff. Not totally, but maybe they took 30% of his ideas and have put it in place, but they won't admit it because they won't, right? They're not going to admit anything about him. It's like personal at this point. Oh, fake A. How dare you? McDonald's is not forever. Oh, you're killing my legacy. That's my legacy stock. You're going to destroy my legacy. I'm older than you. That's right. I'm older than all of you, I think. Okay. Speaking of stocks forever, though, I mean, this is like Amazon finally I feel like it's turned the corner towards actually profitability, and it's not a turnaround play like Disney, but like all the investments they've done over all these years, margins looking like kind of crap, not really having a ton of free cash flow, constantly dumping into CapEx. And here we are. It's like started obviously a year ago when it was like $80 a share. Man, I tell you what, when Amazon was like 80, what did it get to? You want to talk about people like some degree we overthink buying stocks, but like when it was like here, I was talking like about it with certain people in Discord because I'm like, this company's freaking gonna just keep getting bigger, and it's Amazon for God's sakes. But I was like in my head, I'm like, no, I'm gonna wait till it goes to $80 a share, and then I'll put $20,000 in it. So obviously it got to 85, and that's as low as it got. So I was a little stubborn because I'm not a tech investor, but yeah, your price targets are meaningless sometimes. Look at it now, but it's okay. I'm doing okay this year. Let's put it that way. And I do not FOMO in this stuff. Do you think Amazon will be the largest company by market cap? Well, I mean, are they number 3? Are they number 3? Is Microsoft above them? Microsoft and Apple? I mean, really, from what they've designed and all the different departments they have, I mean, I could maybe. I mean, really, it's a 3-legged race, right? It's really Apple. I could see them overcoming Apple. Maybe Mike. I don't know if they would overcome Microsoft's market cap though. Microsoft's everywhere. Oh yeah, so that's right. Saudi Aramco. But here's I own. I mean, I guess if you count SCHG, I own a significant amount of Amazon shares just through Swap's Growth Fund because I think it's a pretty good chunk of it. So I was just reading his letter to shareholders. Some things I highlighted. So they increased the number of items delivered same day or overnight by nearly 70% year on year. So that's very impressive on their logistics build out. They're able to do that. Regionalization efforts helping lower costs, which Tractor Supply was doing this to some degree. They were putting money into distribution centers, obviously way lower scale than this, but Tractor Supply was building out slowly some distribution centers to lower their costs because of transportation. The logistics is a big deal now after what we experienced with the lockdowns. So that's good to see that they did that. They've built out their infrastructure, right? Their planes, their trucks, their warehouses. And then a lot of talk of cost savings now, which I don't think Amazon ever talked about that before. So again, like Disney was saying the same things, right? Cost cutting, path to profitability, which is what was appealing to me last fall when I bought it. So I like to see this type of talk. We're not done lowering costs to serve. So I think he said this in the interview on CNBC too. They're not done cutting costs and making investments in the technology and AI. Okay. Expanding their streaming ads, introducing ads to Prime, which I know because I was watching a show today. I watched the first episode of Fallout. Not bad. I don't think it's as good as Shogun, but it's off to a good start actually for that video game show. So again, you can see here substantial cost optimization and reducing costs. So a lot of that talk in here. Then they're talking about their own AI chips, which some people have thought that the big players are going to develop their own artificial chips so they don't have to have reliance on NVIDIA. I think it's going to be harder than you think. So I think NVIDIA has a much bigger head start than you would expect. It could be years and years to catch up to them if you ever do. So they're hoping Prime can be a large profitable business, which so is Disney. Everyone's trying to make a profitable streaming service. This was interesting. They talked about international shipping. So he said, because we don't have enough space in our fulfillment center to store all inventory needs to maintain desired in-stock levels, we've built a set of lower cost upstream warehouses solely optimized for storage. They also talked about they've had strategies to increase clearing customs from getting products from other countries in the US, clearing customs. They've worked on trying to reduce that time lag, which is interesting. Maybe they see pressure from like Temu, that they've made a push to reduce the time to get through customs at the US. So that's interesting, I thought. I think the end of the letter, yeah. So it's an intriguing I mean, I already just through indexes, I own so much of it. For me to like make individual purchase of Amazon stock, I don't know. It is interesting though. The way the path of this company is. I mean, if you're younger, it's not bad. I think their setup is much better than Apple at this point, honestly. Microsoft's a beast in any freaking situation. So let me play this part. Okay, I'm going to switch back to a video. Lots of videos today. All right, I'm going to probably fast forward a bit through this. This was Jassie's comments about what happened with iRobot, which I heard it this morning.
A firm like Anthropic in this environment,
where you had this, this American company that invented this product, invented the category, and built a business that was almost $1 billion in revenue. And whenever you build a good business, you end up with company and competition. So they attracted these two very large Chinese companies as competitors, and they needed scale because scale lets you buy components at the right price and invest in R&D. So they merged with Amazon, and the European Commission blocks it because they worry that we're going to feature our vacuum cleaner, their Roomba versus others, which of course is not our model because we make actually at least as much money selling third-party items as our own. But they block it, and then immediately after they block it, the FTC comes out and says, oh, we would have blocked it if they hadn't. And so what happens? We abdicate the acquisition. iRobot lays off a third of its staff. The stock price completely tanks. And now is a real question whether they're going to be a going concern. Turns out with these in-house vacuum cleaners, they have to map the inside of your house. That's the way they don't run into a table or a chair. So really what Western regulators were...
I say props to Jesse from Stone Cold Investing. He rode this twice. When iRobot for the acquisition, I think he rode it twice from bottom up and then went down again. And then he rode it up again. I think I got like 50% of what he got though. I didn't get so far into it, but
saying was that they trust these two large Chinese companies with maps of the inside of U.S. consumers' homes more than
the FTC is looking into even the partnership that you have with Anthropic. They're looking at the way Microsoft's relationship.
So basically, he's really salty about what happened with iRobot, I think. And I was like thinking, I'm like, man, like the feds, I think the feds were like super pissed off that they lost the Microsoft Activision merger. I think they were like dead set against preventing that. And then Microsoft just, outsmarted the government basically. And then after that, they were like scorched earth and they're like, nothing gets through from now on as long as Biden's in power. So that's what I think happened. So they're trying to make political statement about any mergers. The Europeans, I don't want to get, it's not my lane of expertise. So I'm not sure what the EU's big gripe was. They seem to be going after every tech company these days. The only thing to worry about is Amazon is that the heavy regulation pressure may limit their ability to M&A. Yeah. Honestly, any and he talked about in that interview too, I didn't have the clip, but he talked about another part of it was because of the difficulties with the Microsoft Activision deal and the iRobot failing, and there was a few others. companies have pivoted to not necessarily doing merger acquisitions, but doing partnerships instead, like Microsoft's partnership with OpenAI, right? Instead of just outright just buying them. So, the big tech firms will, be able to, they'll pivot to some other strategy to get what they want. But yeah, I think they're going to change a bit for now during this administration. These aren't laws. So as soon as, if another president comes in, they bring their own regulators in. It's a totally different ball game. Because unless the laws get passed by Congress, they can just rewrite regulations and stuff. Like seeing Amazon get broken up so I can buy the parts I want. My God. Oh, yeah. AWS, just buy that part. Like the current FCC. Yeah. Yeah. They're going after everybody, right? Google's getting attacked, antitrust. Apple has in the past, they're going after kind of all of them. Meta's advertising. Good job segregating their businesses. Yeah. So we'll see. That was a good interview though. If you didn't see it this morning, you might want to, could listen to it on CNBC, read his letter. I was debating if I was going to talk about Jamie Dimon's letter to shareholders, but I didn't want to do two. So I'll look at that one later. Jamie's, the doom and gloomer guy, and I'm not really a financial investor, so I might skim Jamie Dimon's letter. I did own JP Morgan for a while as a dividend investment. Should have kept it, but I sold it at like 140. So there you go. Paper handed it. I'm just not so big into financials. I did want to buy Goldman Sachs and should have done that. But Amazon seems to be on a really good trajectory, I guess. So what are the risks? Is that they're so massive. If you have a downturn in the economy, right? Fed lowers rates, causes some sort of problems, unemployment goes up, which is historically low. That's going to impact them because their business is people buying stuff online. So times are good right now. That would be the only concern buying Amazon right now, I think. But everything's clicking for them right now, right? So, and I guess you'd have to figure out, does the valuation reflect that? So if something goes wrong, what's going to happen to that stock price? But it's one of those companies that they can handle any problems, I think. I mean, I have that same confidence for McDonald's. They can weather any problems. So AWS is basically its own department. I mean, AWS would probably be an S&P 500 company by itself. Definitely would be. So, okay, we're at an hour. Perfect. Exactly what I wanted. So thank you. The value investing video is taking me longer to do the research than I thought. So I'm reading some letters by Howard Marks. So I'm not a value investor. So I'm trying to figure out what the hell value investors even believe. So I was looking at the Intelligent Investor. I was trying to get some clips. There's nothing really specific in there like criteria. So I'm kind of reading footnotes. And then I got Howard Marks wrote some letters. I'm trying to highlight now. And then we'll go from there. So kind of like an outsider's view of what value investing is from super investors and from the start, and then kind of what is it on YouTube? Because that's what matters, right? Here's the theory, and here's how it morphed on YouTube with creators. Because that's what is important. Like, are they really value investors, or if they warped it into something different, which is what I suspect. So we will see. Value investors believe they're smarter than you. I doubt they get 200% returns. Oh yeah. But I try. I don't know. I tried to be with the Perry on short. I'm just I don't want to go too far into it because stuff that gets talked about in Discord, I don't want to get too in detail. But it was good. I was not unsure. Just I talked about it quite a bit with Andrew, so that was good. I'll let him talk about it more. But I tell you, Monday was crazy when I woke up. So I woke up and I checked my email, And then I don't even always check stocks. Like I just was in bed, I checked the email, and the next thing I just like checked Perry's stock price. I was like, I don't know, just popped in my head, and it was like negative 40%. And I was like, what? Oh my God. I'm like, I jump out of bed, run to my computer, and I'm like, so I check like Seeking Alpha, Google Finance, Yahoo. I'm like, is this a glitch? And then I'm like, oh my God. So then I messaged the group chat. And I'm like, nobody's up though, because it's like 6:30 in the morning. I'm like, what the hell's going on? Oh my God. And then 20 minutes later, I saw other people talk about it. I'm like, it happened. It happened. I've been waiting for this for a few weeks now, I think. Holy shit. That was crazy. And then it's just like, you look at your brokerage, like 400% immediately. It was pretty cool. But which was, Micron, obviously I was prepared because I had the stocks, I had the contracts, and I knew when earnings. Obviously the play was they were going to announce spectacular memory sales and be sold out on orders for their high memory, their new memory for AI. So like it's not like a shock. Like I knew it was coming, the date of it. So this is like, holy crap. Just all of a sudden out of the blue, what you thought was going to happen some point this year, just boom, there it is. Which was exciting. But Meta, actually funny, would not break well across the board. Different platforms. Oh well, okay. That's all I have today. Yeah, quality video or value coming. I'm working on it. But yeah, I don't know how much more I don't know how much more speculate. I might just not do much. The bar is very high. Master Brands, I didn't even talk about that. That was great. Master Brands is doing well. It's dipped a little bit recently. The problem, like I think some of their valuation was baked in the expectation of interest rates lowering, which is what people are all waiting on, because it got up to like $19, and I bought this in January. So I bought it somewhere in here. Peaked up to 19, but then I think it's cooled off because I think some of the speak they've talked about, they might not lower interest rates anytime soon. So a lot of this valuation, I think, that is baked in with like lower interest rates, which will help with mortgages and home sales increasing, because they make kitchen cabinets for people that haven't paid attention to this company. But so I free thought my way into this investment, if you get that joke. But we will see. So, yeah, otherwise keep funding your indexes and look for opportunities out there. I don't know. There's always opportunities out there. So don't let Meet Kevin convince you that the markets are doom and gloom because of macro crap that makes no sense, or people that read charts. Whatever. So thanks for watching and have a good night, and we will see you later. Which play? Okay. Thanks for listening. Bye.